Let's first talk about these group of stocks, the FANG names. They had a rough start to the year, but now this outperformance in August. How do you size up valuation? And, pretty commendable that even in the face of antitrust concerns, these stocks did outperform.
Yeah, I mean, earlier in the year, it was all about reopening and the recovery of the economy. And so the names that had done incredibly well in a very slow growth environment, and then even the shutdown of large segments of the economy, had lagged a bit. And we've seen what's happened in more recent weeks where you've seen some slowdown in the Chinese economy. You have concerns, obviously, about the Delta variant and a slowdown in some of the reopening in the United States. And so those names that are structurally advantaged and the big free cash flow earners are again outperforming. Valuations are elevated compared to the broad market, but I don't think that it's anything particularly ominous. These are the companies that are also generating earnings and revenue growth that far surpass that of the broad market.
Do you think the rebound in technology that we saw in August, some of that has to do with the sell-off in Chinese tech stocks amid this concern around regulation and what the government is trying to do there?
Well, I mean, people will look to the United States and China for structurally advantaged businesses, and to the extent that the Chinese regulators are obstructing some of that structural advantage in China, then presumably it makes sense that some of that money starts to find its way further back into the United States. But I would say that it's even less about China and more about investors' expectations for future economic activity. I mean, the whole recovery reopening trade was all about a reversion to the mean. If you were going to extrapolate that forward, you'd have to believe that the economy is moving to a new, higher, sustained level of growth. I always thought that that was an overstatement. So it's investors recognizing that the recovery and reopening was bound to happen, and it was quick. But whether it was sustainable to move to a new higher level of growth was probably unlikely. So if you moderate at a reasonable growth level, then the structurally advantaged growth companies should outperform.
If that's the case, what part of the reopening trade do you like? Is it the cruise lines, the casinos, retail? Where would you put your money to work?
Well, I think you'll have another leg of it at some point. I mean, right now, what we're dealing with is a slowdown or market's expectation of a slowdown. And so, that's rates lower, growth stocks outperforming. I think you'll have another leg of the recovery trade, and that includes everything that you talked about, whether it's airlines or cruise lines or even financials and energy, which will do better in a better growth environment and a steeper yield curve. But it's going to take some time to get there because of the challenges of the Delta variant. And you're seeing some slowdown already in airline bookings, restaurant reservations, hotel bookings, which was bound to happen. So in the near term, again, growth stocks are outperforming. We'll have another leg of this value trade, this recovery trade, but I don't think it's sustainable over a multi-year period.